1.3 of the question is the property, plant and equipment note. In order to do this note, you need to identify what assets are classified as PP&E either at the beginning and at the end of the year. So it could be that you had something that was PP&E at the beginning of the year, but it's now something else. Still got to go in the note because you've got to show the movement. Or similarly, you could acquire something in the current year, which then needs to go into the note for the year end. We don't have any of that in this question, but we do have something which is no longer PP&E. So if you go back to your trial balance, you'll see that we've got 3 categories of PP&E based on the trial balance and the additional information. We've got land, buildings, both of which were then transferred to IP in the current year, and then we've also got plant and machinery. Remember, we also do have the motor vehicles, but the question clearly told you that the motor vehicles were being disclosed separately in the statement of financial position, which means to say that note will be presented separately and they will be disclosed separately. We're in fact going to present the right of use assets as part of the lease note, and then it'll be separately shown on the statement of financial position. So we only need 3 columns: land, buildings, and plant and machinery. Again, no abbreviations on your part, please. I suggest you always prepare your template first because it's never going to change. So just set the template out first. So you want carrying value beginning of the year, split between cost and accumulated depreciation, or you can call it gross carrying amount and accumulated depreciation. The only time you use gross carrying amount is if assets have been revalued. So you can just stick with cost here, and I'm going to. So I'm just going to call it cost and accumulated depreciation. And then you're going to have a whole bunch of movements. Now my suggestion is that you leave about 10 lines for your movements. You don't know what you've got, but you're unlikely to ever have more than 10 lines. So just leave about 10 lines for your movements, and then you do your closing figures. Carrying value, end of year, again split between cost and accumulated depreciation. I suggest you finish each column at a time. In this instance, you can probably do land and buildings simultaneously, but again, remember, most of the figures we've probably already calculated, so it should not be difficult to do this note at all because you've got all the numbers. Okay, so let's start off with land. Land, the cost at the beginning of the year was 175,000, and I'll do the buildings while I'm here because we're going to look at them hand in hand. It was 1240, and there was accumulated depreciation of 31,000. Then what happened to these assets? Well, the buildings were depreciated, the land and the buildings were then revalued, and then they were both transferred to IP. So let's do it. Depreciation first, we already have the figure, so we don't even need to calculate it. So depreciation from part 1 of the question was 31,000 of the buildings. Then we revalued, so the revaluation, and that's from part 2 of the question. Just to remind you, when we did the calculation of the OCI, so we did the land there, we can see that the revaluation came to 25,000 of the land, and the building was split into 2 parts, but the easiest way to do it is actually to just look at the figure here, 1300, because that's the figure when we transferred it, and the 1209 minus the 31,000, because that was the carrying value on date of transfer. So if you do the revaluation of, if you do that calculation, 1.3 million minus the net of those 2 figures, you will see that the revaluation comes to 122,000. So that's where that figure comes from, and you can just show a little working for that. So 122,000. And then the building we said already was 25,000. And now you can transfer to IP. And you just take it out. 200,000 boom, boom, comes out, and 1.3 million comes out. Which means at the end of the year, boom, 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 nothing. Simple. Land and buildings done. Let's look at plant and machinery. We were given the figures at the beginning of the year, so no challenges there, 3125,000 and 937,500. And these figures will all be worth probably half a mark each, so it's marks for jam if you know your format. Depreciation we calculated already, 312,500, and therefore it is just a case now of calculating your closing amounts. 3125 is closing cost, and closing accumulated depreciation 1250, which gives you closing carrying amount of 1875000. My alignment is a little bit out, but you know what I'm doing. And that is your PP&E note, quite a straightforward one, probably about 6 or 7 marks, because it really was quite straightforward. Normally for third year you would expect PP&E to be a little bit more tricky than this, but bearing in mind it was tricky with the revaluations, so the actual note itself then ends up being quite straightforward. Okay, so that's the end of 3.3. The last note that we have to do is 3.4, the lease note, which is quite a challenging one.